Hello, good afternoon. Or good evening, should I say now? It's Adil Fazal here, market analyst at CFDs.com, bringing you a review of European markets for the price action on Tuesday, the 16th of February 2016. Be sure to visit CFDs.com for your trading needs. As always, the generous 25% cash opening offer for all new accounts is certainly still applicable, so certainly take advantage of that. Alternatively, visit the educational site www.cfds.education to certainly learn more. Okay, let's try and analyze this market and decipher this market and see exactly what's happening here, folks, in terms of the price action overnight. Let's start off in terms of chronologically deciphering this market. The Nikkei up, more or less flat, basically up 30 points. The Hang Seng and Shanghai certainly impressive, up 3% and 1% together. Okay, so certainly a very impressive move there. Okay, and that certainly helped risk sentiment going into the morning, certainly from the FTSE's perspective anyway. Okay, so we had, in terms of news flow from the European session, overnight there wasn't anything major other than industrial production from the Japanese market, certainly down more than expected. EU trade balance in the morning, certainly worse than expected. ECB president, well, actually that was yesterday, I do apologise. Okay, so the RBA meeting minutes overnight, that was the one of the main moving points in terms of the movement. Now, you had the RBA certainly hawkish, although the Aussie certainly has taken a turn for its worse, given post the actual OPEC news. Okay, RBNZ inflation expectations and retail sales overnight certainly negative. Okay, money supply data out of China certainly better than expected. Hence the reason why the Shanghai certainly moved higher. Italian trade data certainly better than expected. UK retail price, RPI, CPI, overall, basically, summation was that inflation certainly higher than expected, and therefore that's hawkish for the BOE, and therefore that's negative for the FTSE 100. Now, the FTSE 100 was lifted in the morning due to the secret OPEC meeting between Russia and the Saudis, which really was a water pistol moment, or was more of a firing a blank type moment, because it was more of a because everybody expected the OPEC to certainly cut supply, hence the reason why we had this so-called secret meeting. Okay, as you can see with regards to the price of oil, it certainly has fallen, and obviously the FTSE certainly reacted to the downside as well, although it has bounced later in the session. I'm going to bring up a chart of crude oil, bear with me. Where are the oil. Brent is here. Okay, crude. There we go. Okay, so crude oil, as you can see, 60-minute chart, certainly very bearish. Okay, so it even failed to hold that gap fill level and certainly moved lower. So crude oil certainly bearish post the OPEC news. And that obviously sent the indices lower to a large extent, although they do seem to have recovered now. Okay, so inflation data out of the UK certainly weak. ZEW out of Germany, current situation worse than expected, but economic sentiment slightly better than expected. Okay, yeah, although the previous one was at 10, now it's at 1, so that's not exactly bullish news. ZEW out of Europe certainly better than expected, surprisingly. The New York State Empire was certainly weaker, and the housing market data certainly weaker as well. And that put pressure on the US markets, which in turn sent the European markets lower as well. Okay, now oil certainly moving lower. Oil fell from a pivot high of 31 down to 29. Okay, so down $2.5, certainly weak. Okay, having said that, it has rallied from 26 to 31. So putting that into perspective. Now, where are these markets positioned technically? Now, that's the question, okay? Now, we did have inflation data. Now, in regards to the FTSE, specifically the FTSE 100, inflation data higher than expected, therefore hawkish. Mr. McCafferty's so-called reference to negative rates was negated. OPEC supply did not cut. They maintained current production levels, therefore that's not exactly bullish for the oil market, and therefore that's considered to be bullish for the FTSE 100 as well, okay? And for Europe as a whole. Although European markets certainly are bolstered by Mr. Draghi's speech yesterday with regards to the potential of him buying bad loans, even from Italian and EU banks, which again alleviates the concerns, and the banking sector is something that he's closely watching, and if that obviously starts to deteriorate any further, then he is going to push the QE button. So that in itself will be a good put for the European markets, and that should keep the European markets afloat to a large extent. Hence the reason why I've certainly employed a tactic of buying the dips in European markets at this current juncture. Okay, right. So in terms of the Euro stocks, let's have a look here. Okay, so we had this HNS formation on the Euro stocks on a 10-minute chart, which was more or less confirmed in all the other indices as well. You can see the right shoulder here, and then obviously we dipped. We came back up, retested the neckline, and obviously got slammed again. The pivot high was 28.60. The neckline was 28.30. So we had that 30-point drop down to 2800. So that was more or less that HNS more or less was completed. Now where do we move next? Okay, so we have this downward sloping trend line, lower lows, lower highs, and we have this unfilled gap below at the 27.55 level. So certainly remain open-minded, and that certainly is a potential target on the downside, especially with the price of oil certainly feeling the bearish pressure. Okay, in terms of the 60-minute chart on the Euro stocks, we certainly seem to be levitating between this 2860 zone and the pivot support here at 2820. Again, you do have the unfilled gap below, and therefore the market can certainly be vulnerable to closing that gap at any time, even though you have QE. Having said that, there is another gap below at 2680, 2670. That is very unlikely to be filled. The euro certainly has been hammered today, and it certainly is helping risk to a large extent. If I bring up the chart, the euro USD, even though we had weak US data, the euro certainly is under pressure now. Obviously, still feel the pain from Mr. Draghi's speech. The pivot low that we witnessed was 1.124. We certainly seem to have dropped from the 1420 level, which I don't quite understand why, given the fact that the US data was certainly weak and therefore would indicate euro USD to certainly move higher. Again, very strange. Okay, nevertheless, let's continue. Let's continue with the rest of the indices, and let's see exactly what's going to happen here. Okay, so the German DAX certainly putting a pivot high, had the HNS, tripped, fell, and certainly is currently sitting at the 91.30 region. Again, you have the unfilled gap below. You have 200 MA support, horizontal support. Certainly does remain well bid. Currently trading at a 9160 area after hours. So again, it will all depend on the US markets and how they will react. Okay, given their weaker housing data, weaker Empire State data, again that will exert pressure on the downside. But the German DAX certainly has resistance now on the 10-minute chart. You have this key resistance zone at 9170, and you have resistance at 9160. So 9160, 9170 is a key zone. So certainly keep a lookout for that, and that will act as potential resistance. If you push higher, then you have 9200, and obviously you have the 9250 zone as well, acting as resistance on the German DAX. On the 60-minute chart, German DAX, you've certainly pushed higher. It's all about that higher low now, folks. Okay. Having said that, it would, from a technical perspective, make sense for us to close the gap at 8960 as a higher low, and then obviously a push towards a higher high. So that certainly needs to be taken into consideration. But technical perspective, it's perfect. Previous support equals resistance, and you can see what we held as resistance on at 9260, and then obviously fell lower. Going to the daily chart, you can clearly see that we had this key diagonal trend line, and that diagonal trend line certainly helped to a large extent. You do have that key resistance zone at 9350, so all eyes on that 9350 resistance zone. Okay, in terms of the French CAC now, let's see where the CAC is positioned at this current juncture. Again, it's making lower lows, lower highs, so therefore pressure would be on the downside. Okay, even though we had the Asian markets rally overnight, the Asian markets are into resistance. Let me just bring up a chart of the Shanghai. What do you see? Previous support equals resistance on the Shanghai on the daily chart. What do you see on the Nikkei? Previous support equals resistance on the Nikkei, diagonal trend line. So therefore the Nikkei and the given the fact that the USD JPY as well is under pressure, if you bring up the chart of the USD JPY, you'll see that the actual yen pair itself, zoom in slightly for you here, 60-minute chart, then you can see that ever since we found resistance on the yen or USD JPY, i.e. yen starting to strengthen, you can see how the USD JPY has fallen, and obviously risk aversion has gone with that as well, i.e. risk off scenario. Okay, so very, very simple concept here. You can see if I bring up the chart of the US dollar as well, I try not to digress too much, folks. I mean, there's a hell of a lot of variables that I can talk about in my videos based on intermarket analysis. This is just a few of the variables that I have to observe from an intraday perspective. But if I bring up the chart of the US dollar, be DJFXCM, bring up a chart here now on a 60-minute chart, and you can certainly see that we certainly are certainly pushed higher, and certainly looking as if we want to potentially reverse. Okay, so certainly showing weakness. Okay, on the 10-minute chart, you can see that we're certainly exhausted. We've closed this gap here. Okay, and the market has found resistance ever since. So again, watch out for that. Further lows on the dollar will send the USD JPY lower, send the euro higher, and obviously you're looking at risk aversion. So all those things, all those concepts need to be taken into consideration, okay, with regards to the dollar chart itself. Now there is the 24-hour dollar chart. Let me just bring up that for you as well, if I can find that. If it's actually in here. I don't think it's here at all. Okay, it's not actually included in this, so I'll leave that for now. Let's move on to the actual FTSE 100 now. I think that's going to be the important chart. And then I'll certainly end this video and tell you what my bias is for the next 24 hours. So if I just find the FTSE 100 chart. Here we go. Okay, so FTSE 100 chart, looking at the daily first of all, you can see that we're holding that resistance at that 5,875 region, which is fib 61%. Given the fact that oil prices now are languishing just below $29 at 28, therefore it's considered to be risk off. 60-minute chart of the FTSE, you can see that you've had this red candle or bearish candle following the green candle, therefore the bearish engulfing candle certainly is in control. You're consolidating within that candle, and then we're looking at for potential new lows. Okay, that's if oil prices continue to fall. The 10-minute chart on the FTSE 100, again you had this H&S formation. It's been oscillating at this right shoulder all day. And although after hours it certainly broke out to the 5880 level, it certainly is circumspect to my understanding. Okay, again that zone at the pivot top at 5880 resistance certainly is expected to hold. Okay, in terms of the price action there. Okay, now the actual 60-minute chart of the FTSE 100, you've seen that we have this bearish engulfing candle. If you do break out of this 5880 zone, then the next level is obviously 5940, and that will need oil prices to certainly move higher quite considerably. So again, impressive strength of the FTSE, but we certainly need to see more evidence of the potential next move. Now, I'll bring you up the chart of the copper index. You can see that copper certainly has held confirmed resistance at just above 2.08. and therefore looking to potentially move lower on the price of copper. Okay, so again, all eyes on the Aussie as well. You can see the Aussie certainly has been under pressure, has been flushed quite to a large extent today, almost 100 pips down, but is now coming into support, and potential RBA hawkishness should support the Aussie itself. Now, I am actually long the Aussie and looking for higher prices. Certainly looking for a potential move higher. So all eyes on the Aussie itself. The Kiwi certainly has come under pressure today due to the global dairy auction weaker than expected, along with retail sales and inflation data weaker than expected. So the Kiwi will certainly remain under pressure for the remainder of the day, which in turn should indicate further weakness on the FTSE. Okay, now the US markets will dictate for the next obviously overnight. Going into tomorrow, I can bring up the chart of the S&P 500 and actually share it here. Okay, so you are into this no man's land on the S&P 500. These are the key zones of resistance. We certainly seem to have broken that. It is screaming for that 1900 zone and that 1910 zone on the 60-minute chart. 10-minute chart certainly looks overextended now, indicating potential reversal as on the cards, and it's coming very shortly. You do have support on this downward zone here. Okay, so it certainly has been helped by the Chinese thrust overnight. Looking at potential zones of resistance, there's one here that will potentially aid me. Here we go, another level of resistance. So these are all zones of resistance. Again, you're not a double top resistance zone. Okay, so again, we're feeling here in terms of the next move. We certainly have closed that gap now, so that's quite impressive. Okay, really, really impressive. Again, with the price of oil dropping and weaker US data, the bias certainly remains towards the downside at this current juncture. So certainly keep an eye on that gap fill support below at 1865. That will be your key zone in terms of assessing risk on the US markets. But that gap certainly looks very tempting to close, and watch out for that potential gap below, especially with regards to the S&P 500. Now, the Nasdaq itself, again, that's holding that fib 61%, and therefore is into resistance now. The 10-minute chart certainly is showing you that double top resistance, and therefore looking to potentially reverse lower. The pivot low for the day was the 40-50 zone, and that zone may well come back into support, although you do have an unfilled gap below that certainly needs to close, so all eyes on that potential zone as well. Okay, folks, I think that's a market wrap. From my perspective, the US markets certainly are looking top heavy due to weak data. Given the fact that commodities certainly are under pressure as well, you should see some follow through on the downside with regards to US and European markets. I think that's a market wrap. Be sure to visit cfds.com for your trading needs. Goodbye now.